everyone, from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened during the day in the markets and how we can plan for a better trade for the next day. So we had a down day today. It was a red candle, can say it's a bloodbath day, but seems like the market is holding on the last support before it retraces further. Let's see what could happen more likely for the next day. Remember, this is analysis. It's for the next day of. It's a pre-market analysis for the next day, right? That's for tomorrow, April 19, Tuesday, 2022, and we would be doing that based on all these parameters that you see on the left side and the right side. We'll have data analysis that will be done on some of things like the currency, commodities and global markets, and then we'll also wrap up with some actionables as well. So here is the chart. Look at the bearish candle that we have today, and so basically we had a bearish day on the Banknifty. We had even more bearishness, that's same, because we have a so both of them had big down day. We had a doji candle that is formed here on the Nifty, and we have a small body, not a doji. The small body, any small body is indecisive. So indecisiveness is the is the outcome of the day that the candles are indicating, right? Market is in indecisive mode, right? But you can still see that it's still at a support zone. So bounce up is still possible, and you have all the confluence of the whatever left. Moving averages are also there. Let's see what moving averages are there. So we have 50 and 200 DMA support is there here, where the Nifty is there, and it is 20 and 200 support that is there for the Banknifty here. So we are at a major support zone, and there is a chance that it can bounce up further. So that's what. So let's summarize that it's 300 points lost and 1.7% down. Indecisive doji is formed, and similarly the Banknifty, it's 2% down and 730 points down, right? So it's a small body bearish candle, and it has lost a 61% on both the indices. So basically, it's a price action, is a trend line channel downfall that's happening, and flag breakout seems to have coming back and then falling back to the channel trend line, right? So here we had a flag pattern that has formed here on both the indices, and then it moved up and then it's fallen back to the channel top, right? That's the same thing that is happening on both the indices, right? So that's the day, right? So we have lost substantially, right? So what are the percentage that we lost? 1.7%. So almost 2% of fall has happened today, and it's a gap down, big gap down with indecisive candle. And now the question is, will it hold this or not? Will this hold this, or will it further break down? That's a question now, right? So in that price action, if you see, you can see the V-shaped move again coming into play, right? We had a gap down, and then we had further gap down, and that was range bound because the V-shaped volatile recovery happened, and that's in a 150 points on the Nifty and a 450 points on the Banknifty. That's a price action on the intraday that we see, right? So Bollinger Bands. So one point to remember is that the change in polarity is still possible on both the indices, right? Because it's a previous resistance zone which is now acting as a support. Still, it's possible. It could be possible anywhere where the previous resistance acts as support. So that's always there. And the moving average is confluence. You can see, the market is just about to slip down all the moving average support levels that we thought it had. And similar to the Banknifty also, it is just hanging on at the confluence of the moving average that we thought was holding the market, was going to hold the market for a long time. So Bollinger Bands, if you're seeing, you can see it's a consolidation that's happening, and skews or a contraction has happened, but at the upper side, not towards the lower side. So the bias is towards the upper side, but there is a contraction that has happened towards the top. Banknifty also, you can see that the contraction is just started today. It was up more early, but the thing is, it is almost, so it has clearly given up the 20 moving average in the Nifty, which is clearly giving a negative bias, right? But the Banknifty, it's given up, but it's hanging on till there. So overall, there is a bearish bias that the Bollinger Bands is saying because of the slip of the medians that has happened on both, right? But it's a contraction. The volatility is still there in the Banknifty, but Nifty it's less. But so it's going to be terrible volatile, no, semi-volatile consolidation moves, no, with current next few days of a bearish mood is what the Bollinger Bands are telling us, right? So let's make a note of the support resistance levels, right? So right now, if you look at, no, we can see that there is a small body candle that is formed, and it is still not given up the major support, which is a gap support, right? Which is a previous gap, right? Where is this gap? This gap was very good support. No, 17,000 was a very good support, and still not broken, right? Still not broken. Even though there was a retracement that happened near to that, it's still not broken, and it has taken that support. So that gap is still there. 17,000 level gap support is very, very strong, and hopefully it won't, fall below that. It may take support here and then it can bounce back. So support is at 17,000. First support would be the 17,200, 17,300 levels. It is given up that, but we can consider that zone to be a support zone probably. Yeah, and after that you have support 17,000 and 1750 levels. Resistance would be 17,350, 400 levels, and above that 17,500, 17,600 Fibonacci 23 retracement levels. Then the resistance would come at 17,800, 850 levels, and above that 18,000 holding number levels. That's where the resistance is on the upside. Supports, we talked two of them till 17,000. This yellow box is a support zone. It's a gap support, window gap. That's pretty much strong, as I said before. And then if that is also breached, then we go to the 16,900 Fibonacci 38 retracement levels, right? And below that you have 16,700, 750, 16,650, 550, that range, and then comes the next gap support that is there at 16,450 levels, Fibonacci 50 retracement level also, that is, right? So that's support zones. And on the Banknifty, if you see, it's a small body that is formed, right? We just taken a support at the 36,800 Fibonacci 38 kind of levels, and resistance above would be 37,100 nearby levels, and then above that you have 37,300 Fibonacci 23 retracement levels, 37,500 levels basically. Above that it's 37,800 levels, and then 38,000 levels, and then 38,500 levels, and then 39. So that's how the resistance goes on the downside. If this 36,800 Fibonacci level is breached, then you go to the 36,000 levels, and then 35. There is some lack of visibility there. I'm just going directly to charts instead of giving the wrong numbers there, right? Let's go to the Banknifty and see the support resistance levels also. So that's it. That is 36,300, 36,800 is where the current support is. If that breaches, then 35,600, 35,900, then that breaches 35,000 and 35,300 Fibonacci 50 retracement levels. And then if that is also breached, then 34,750 levels would be to 34,350. Then if that is breached, then 34,000 Fibonacci 61 levels. There is a gap support also coming here. Upside we are already seen. So the Banknifty seems to have given up a major gap support now, right? Now it is falling back to the flat breakout. It has fallen back to the trend line channel once again. Right? That's how the support resistance levels are. Let's go back to the slides and then move a little fast. So divergence, nothing is there, but momentum has shifted now to some sideways momentum on both the license, you can see, right? And the short term and the medium term also, the momentum has turned to sideways and with no divergences. Trend indicators, if you see, it's basically it's crossed over to the bearish zones. So trend has crossed over the bearish zones on not just short term but medium term also, and that on both the indices. But the strength is not that great. Trend strength is not that great. That means it's more to bearishness, but not with great bearishness. because it just crossed out. So that is something that is the big thing. Trend has crossed over on both time frames. Momentum is sideways, okay, it was sideways in minutes, but trend crossover happened today. Volatility, if you see 8.7% down, it moved up, spike. That's what happened today. It's 19.3, much more closer to the 20 level where the VIX is considered to be higher. Implied volatility on the Nifty is 18.98 against backed up. Implied volatility percentage is 76.2%, and that is also spiked from the 68 kind of levels. But considering few weeks before it was 98 kind of levels, so still it's okay levels. But if it further spikes from here, it's a problem. So that's what you have to be cautious about. That's volatility, momentum, trend. Now let's jump into and see the open interest analysis. The two things in open interest analysis. One is futures open interest rate. That today's build-up is short build-up clearly on both the indices. And options open interest is what you see here. You can see a lot of call writing getting added up. Right? A lot of call writing. Very little of put writing is seen there. So the levels of the highest put and call writing is seen at 17,000, 18,000, 1,000 point range. And we still have Tuesday, Wednesday before an expiry day, Thursday. So 16,500 and 18,000, the second level of highest support and resistance. Let's see where the put and call writings are done. And Banknifty 37,000 and 37,000 both. A lot of people have written straddles. Call and put writing has happened, but both at the same strike of 37, and then 36,000 and 39,000 where the second level of put and call writing is there highest. So that's a range that you get as of now Monday, first day of the trading, and put call ratio is showing that it's very close to bearishness. 0.47 for Nifty is bearish. 0.54 is very close to bearishness. So short build up. So overall, the options that are futures and options both are saying that there is negativity in the market. Look at the red candles. So HTB twins are the highest contributors of the decline. Even IT also did not. You see very blood red in Infi and TCS for some reason. It could be the earnings results that might have come out. Could be that. But overall, major sectors of financial services, that's banking, and the IT didn't do well. Some green has come in by FMCG and automobile and metals. That's it. That's how the sectors performed. So if you look at index heavyweights, nothing but it's all red there. HDFC, seems to have lost a major support. HDFC Bank also seems to have slipped from the. Look at the way it has moved after going to the circuit level, high levels, and now it is given up major supports and then coming back to where it had started all this. Crazy moves in the HDFC twins is what you see there. Right? So Reliance Industries seems to be made it in the green. There is a channel breakout that happened and seems to be consolidating now before, probably moving further up. And then Infosys, if you can see, it's another red ray. All the IT sector itself did bad. So that's reflecting the Infosys also. TCS also seems to be the edge of the trend line channel, and then it's a bearish candle and going back to where, if it slips further from here, then it may be moving out of this very long trend line channel, right? And moving, further bearish moves. Momentum is also seems to be, switching to the bearish side, right, on the short term. Same with Infosys also, it has already crossed into the bearish zone on Infosys. ICICI Bank, if you see, it's a green maintaining, it was doing good, and now it's still maintaining a short-term momentum in the bullish zone. So that's the only sector that's doing good. ICICI Bank. Kodak also is going down. It's a dark day for the Kodak Mahindra Bank also. Sideways is the moment. It does not slip into the bearish zones yet for the Kodak Bank. So that's how the index heaviest performs today. Right? Overall, a down day, and ICICI Bank is the only bank that is done somewhat okay. Right? Even Reliance is also done good, but IT and the HDFC banks, twins, are done bad. Let's look at the sector performance on IT. 4.6% down, big down, bearish candle, and the momentum is in the bearish zones. A few weeks back, it was a performing stock, and now look at that. Even the medium term also is in the sideways. So stay away from IT. Metal is closed flat, 0.33% up, and still maintain bullishness. but near medium term is still sideways. So just have to wait, or you could bet with the tight stop loss because short term momentum is still not given up. Auto is also flat. Pharma is also flat. So three sectors are flat: metal, auto, pharma, overall flat. With the metal and auto slightly half a 0.4% kind of levels up, while pharma is down 0.4%. So overall sideways movement in all of this, except metal, which is still managing to hold on to the bullish zones, right? So FMC is close green today, the only sector that probably close green and still maintaining the bullish. Now there is a reverse divergence that we talked about the other day, which is in action, but the medium term is still sideways. So you can say FMC is doing good. It's bullish, right? Reality closed at with sideways momentum and 1.3% down. So medium term also is sideways. So just have to stay out of that for some period of time. So FMCG metal managed to be very close to the bullish zones. Other sectors are all sideways, and IT, the major sector, is gone into the bearish zones also. So no clear picture emerging from this sector as of now, because metal also is, even though it's bullish, it's on the edge. And the reason is this: look at the institutional participation, right? 6,400 crores of selling in the cash market has happened from today, from the Fyers, and the comparatively higher 3,340 crores of cash market buying from the domestic institutions has not really helped. And look at what they had sold. If Fyers had sold the last 2 days, 3,000 crores, 2,000 crores, 1,000 crores. So selling there is non-stop since last April. It's almost a year, and selling has never stopped. Look at USDI, US dollar index, and shooting up. It is taken out of the 99.6 and it's heading towards 103, which is the next resistance level. So dollar is strengthening and rupee is weakening. Today was some kind of resistant red flag, indicating small gains in rupee is there, but overall Nifty is above 76, means it's not good for the markets either, right? The weekend rupee is not good. Global indices also is, it has been shaky and it has been retracing after a bounce up for a revival that has happened. We can see that it is slowly coming back. It's a bearish day, and Dow Jones also slowly coming back to take the support at the previous place, which had acted as support since very long time. Nasdaq also is slipped from the resistance and now heading south. As in, we find it also is a bearish day. You can clearly see that it is retracing all indices. So US markets bearish, and then bearish in the sense, in the short term it is sideways momentum, and it is doing a retracement before. Probably it may go up, but it's currently, the retracement is seen clearly since last several days, almost 2 weeks time on all indices. So that is shaky. You have to be careful. Same thing will reflect in SGX in our markets, obviously. Crude oil had cooled off below 35% of retracement happened, and it is cooled off below the 195 levels, but again spiking back and then closing above the 100. It's 106 now. So momentum is also rising up, but still not to the bullish zone. So looks like it may make another move towards 13-year high. It's possible. Look at gold. It's making a big bounce up move, and looks like it's going to take the all-time high, which it missed last time, right? 2074 is a level where it fall down inches away from that. Looks like it's going to take 1994 is with a green bullish handle, and the momentum clearly in the making a range shift concept, and then bouncing up from there. It is extra bullish. That is what you see. This time looks like it may hit the all-time high level. Gold. So gold is moving up, means there is obviously something to worry when we look at the stock markets. There is very chance that and along with the crude also rising high, there is every chance that markets can turn to bearish. So you have to be cautious on that. But gold is where the hedging portions has to be done before it is too highly priced. After it takes another all-time high, it will be too much price. This may be a time to take your investment into gold, or use the hold as a hedge against the market corrections. All of this, right? Actionable to Bharat Electronics is it has been long consolidating, and the breakout has already happened, and today it is a confirmation that it is happening. Look at the volumes are high. Momentum is also bullish. It's the daily candle you are seeing, right? So it's a cup and handle breakout. After the consolidation happened, and then clear bullish moves, right? So short term it can give gains, but if price moves above the a current candle, then that may be time to enter, and should have tight stop losses. You make it stopped out sometimes, but re-enter that. It may be a retracement. NTPC also is having a rounding pattern break on. It is clearly visible here. Big moves happened today. It has taken out the resistance and it is trying to retrieve, and now it has done a change in polarity and it is bounced up. Right? Look at the volumes, huge volumes and huge momentum. Right? Trend is also rising up, to super bullish zones. Right? That's what ADX indicator below indicates. So NTPC still has a long way to go before the channel top at least, so that can give swing or small short-term trades, good profits, but with tight stop losses is what you have to play. Bar Electronics and NTPC are two picks for the next week. So just to wrap up, moderate bearishness is my short-term view for the next day. Okay? And why it is, we have already seen the chart patterns, we have seen the support resistance levels, we have seen the momentum that is falling and crossing over, the trend that is crossed over on even on the medium term, and Bollinger bands contraction, right? Median slippage for Bollinger bands, all this we have seen. So can't help but be moderately bullish for the next day, right? No, bearish, I mean. So bearishness is the view next week. So see, the fact is that 15-20% correction happened in 5 weeks. That's very good, right? But now we thought that all the supports downside is there with the moving averages, but looks like we may give up all those moving average supports. That may slip back. We might have made another lower high, lower low pattern. So if you so there is a very likelihood that we may head towards doing that, right? That it may be decisive for the next day, because still we are kind of a support zone. So will we fall further down from the median far away, or will we take the support zone where we are right now and then bounce up? This question. So anything happens. So that is where we are right now. But if it falls down, we can be clearly saying that okay, this is going to make another lower low. That's how it is, right? So Fyers are selling it, very aggressively about 5,000-6,000 crores means, market obviously would go. Crude prices high, rail, dollar, rupees weakening, and all this, I know the trade, right? War and peace, all the talks, it's still happening, right? It can escalate anytime, overnight, you never know. So all that is rising, to short up today, 8 to 9% in a single day, and it can be will climb over the 20 again and move to 30. It's all possibility. So you have to be cautious about 20, stay away from it, from the trading basically. Over 25, definitely stay away. Right? Positive factors are still there, a lot of, but overall, there is a global uncertainty is there. Positive factors in our retail support of our Indian markets. So there is possibility there. Otherwise, we wouldn't have made a 15% move in 2 or 3 weeks, right? So VIX is cool off, but still below 20. So, but just we have to be cautious. Never have overnight positions which are not hedged. And intraday volatility is still there every single day, even today. So you got to be cautious, even if you are going for bearish bets, right? The buy on dips thing would come in, and then you get, markets could make V-shaped moves upwards, and then, it may not work on indices. So you have to be carefully watching the lower time frames with the chart patterns and all other indicators. Carefully watching the momentum, and then get out of with tight stop loss. That's the only way to play the intraday. Right? Even if on the downside play as well. Right? So all with the bearish, moderate bearishness that is there. But as I said, the CIP, change in polarity bounce can still be possible. Market is still at a support zone if you see, right? So that's a view that I get. If that helps you to frame your own view for the market tomorrow and your trade plan influence this video, then definitely hit the like button, share, subscribe, leave your feedbacks. Let it reach out to maximum people so that it helps us also, right? Because we have very few subscriptions, and it will keep us motivated to keep doing this every day. Okay? Thanks for watching. Happy trading, happy learning. Bye.